IVM.
I find it baffling how I've lived my life without CRED up till now, because now I can never go back. With CRED Protect, you will never miss a due date again because the app reminds you to pay your bills on time. Plus, it detects any hidden charges on your bill and gives you category-based analysis of your spends. It's like they've thought of everything to help make management of my cards frictionless. Don't believe me? Well, just download the CRED app. Folks, welcome to Paisa Vaisa, brought to you by CRED, the most rewarding credit card bill payments app. I'm your host Anupam Gupta, B50 on Twitter. My guest today is Harshad Chetanwala, a co-founder at MyWealthGrowth. It's been a long while since we spoke to a financial planner or about financial planning. It's always a topic that we like to keep revisiting over and over again because it's one of the basic tools of achieving your financial goals. So let's start. Harshad, welcome to Paisa Vaisa. Thank you so much for doing this for our listeners.
Anupam, thanks for inviting me. It's a pleasure to be on this show called Paisa Vaisa.
Thank you.
I'll try to make it more Paisa Vasool kind of a discussion.
Yeah.
Okay.
Half of my listeners think that that's what it's called, but whatever works. So let's start with a brief background to yourself and how you formed your firm, MyWealthGrowth.
Sure. So, Anupam, I have around 18 years of experience in financial services. I've been in mutual funds. I've spent some time in direct equities, and then started my career with insurance. And for a brief time, I was with a third-party distribution where we were dealing with all the financial services. I think what happened over the years is through our interaction with a lot of investors and clients. One thing which is very sure that we Indians are natural savers. We love saving. Okay, if you see then the percentage of money which is lying in our savings account and fixed deposit, it reflects that. What triggers us to think about starting with MyWealthGrowth is the habit of just saving money and just keeping it aside and forgetting it. So जो पुराना जो एक ad था ना जो fill it, shut it, forget it kind of an approach.
Yeah.
People used to follow that in people still follow that in finance, okay, and personal finance, and they just keep their money aside in jahan bhi dal diya wahan dal diya, just I've forgotten it. Okay, what eventually will happen is that a lot of people will not end up making the most from their money. So this I have been seeing for years, and very frankly, almost 3 years back, when I and my colleague, co-founder Ranjit, okay, we were on our way back to home. We both live in the same side of the city, okay, and at that time we discussed that there is a lot of potential and opportunity to help a lot of investors who can make most from their savings and investments. So this 3 years back we thought of it. Last year in the month of March, just 20 days before the lockdown, we started company. Okay, that's MyWealthGrowth. Been a fabulous journey so far. Okay, the idea here is that what we plan to do is we plan to set up a personalized journey or personalized financial planning setup for the clients. Okay, where there is a one-to-one interaction where we deal with our clients and understand their financial needs and work on their financial plan. That's one segment. Okay, the second segment is also that we are trying to develop is on the online platform where there are a lot of people who would like to prefer to take advice online and invest online. So that's another segment that we are developing right now. So we've spent 1 year to build the offline personalized financial planning engine. Okay, and despite of all the challenges with COVID and what all things are happening around, I think we have been able to catch up a very good pace in that. Okay, and I think money is more valuable during this COVID time.
Okay. Yeah.
So that's where I think the thought process came almost 3 years back. 1 year back we started off. And the journey has been good and it's going strong.
Sure, good to know that. So, Harshad, just to understand this right, because I don't know whether we've had any financial planners per se on Paisa Vaisa, but there's also the fact that there are so many categories out there of advisors and distributors and whatnot. So, let me get this right. You're a certified financial planner. So, I'm trying to understand the services that you can offer, and I'm asking because, like I said, there is an AMFI mutual fund distributor, then there is a SEBI RIA, and then there is God knows what. So what exactly is the CFP, the Certified Financial Planner degree about, and what services do you offer, and how are you differentiated from, say, a mutual fund distributor or a SEBI RIA?
Sure. Anupam, it's a very good question and a very important one. The basic difference between a AMFI registered mutual fund distributor and SEBI registered RIA is the way they offer their services. Of course, there is a bit of overlap between the RIA and what mutual fund distributors does. But when you look at RIAs will look at the overall personal finance of a particular individual or a family, which will include everything like your income, your expenses, cash flow, financial goals, the way they are managing their debt, their insurance planning, their tax planning. It's like a holistic view towards the overall personal finance of a client. Whereas a mutual fund distributor will restrict their activities towards advising on mutual funds or facilitating a transaction in mutual fund. A simple way to understand that is, the difference between a doctor and a chemist. Okay, so there are a lot of people who would like to go across to a chemist and buy an off-shelf product and take care of their health. And then there are people who would like proper diagnosis of the issue, take proper treatment, and then take care of their health. A financial planner or RIA is supposed to be the specialist who will ensure that they will help their clients in managing their money, overall money across all different kinds of investments tools, as well as taking care of their savings and expenses. That's what the RIA does. Okay, whereas the mutual fund distributor will restrict their activities towards mutual funds. Okay. Coming back to the question on the CFP, certified financial planner, and the SEBI registered RIA. Okay. So certified financial planner is basically a certification which is through the FPSB board of US, where you are supposed to give 4 modules of your exams, and then you certify yourself as a financial planner. Okay. And that's a sort of a degree, you can call it as. Okay. Then what you do is with the help of that CFP, okay, you can apply for a SEBI registered investment advisor registration. Alternatively, if in case you are not a CFP and you still want to be a financial planner, okay, and plan financial plans for your client, you can also clear your NISM investment advisor 10A, 10B, and that's good enough for you to apply for a SEBI registered investment advisor. But there are a lot of difference. So SEBI registered investment, there are a lot of responsibilities that a SEBI registered investment advisor will have. Okay, so there's a lot of profiling that need to be done, a lot of documentation need to be properly done. Okay, the advice will be across different avenues and not just mutual funds. Okay? So that's a massive difference between a mutual fund distributor and a RIA.
Sure, got it. I was just because I didn't know that the FPSB certification from the US is probably on par with the NISM exams, and therefore, if you clear those exams, you're as good as a SEBI as a SEBI RIA out there. So you're saying that your services are on par with what an RIA offers. Am I correct in assuming that?
Yeah. So I'll tell you, I did both because I always felt that FPSB and is from US, and then someday SEBI may say that Indian certification is required. Okay, yeah. Always good to have the backup, but either will do at the time of application of RIA through SEBI.
Okay, understood. Okay, let's move forward then. Let's start with the concept of financial planning. Okay, it sounds really, really, really simple. Probably some of us just take a notebook or an Excel file and sit and do it. Some of us probably go on some kind of an app or online website. But in your definition, Harshad, okay, what does financial planning mean and how does the process work? Maybe if you can, make a flowchart for our listeners so that they understand exactly what we're talking about. I mean, this is a financial plan special. So walk us through the process.
Sure. I think first and foremost, let us understand, what is financial plan and why financial planning is important. Okay. So financial planning, in my view, Anupam, is must for everyone, irrespective of your income. Okay. It's not that exclusive for particular income group, and it has its significance for everyone. Let me just explain you that. Okay. So when I was earning around 7,000 per month, okay, I had my own wish list, financial objectives. I had my own investments, and I had my own plans of improvising on that money. At the income of around 70,000 per month, my wish list would have improvised. But at the same time, okay, in both the stages, I wanted my hard-earned money to do well, right? So likewise, okay, it's not about how much do you earn. It is basically like how well do you want to optimize your existing hard-earned money. So that is and if in case you want to do that, best way to do it is to have a proper financial plan in place. So in simple words, financial plan is basically managing your income, assets, cash flow in a much more organized and an optimized manner. Okay, that's how simple it is, and it is simple, as you correctly said. It is very simple. Okay, also a part of our financial world has made it, with the jargon, we have made it more complex. Okay, Now, financial planning, when you look at it, okay, like financial planning process, agar hum bolenge, so the first leg of financial planning is all about valuing each and every rupee that you have earned, okay, and giving a direction to that money. So, none of us leave our home without deciding where are we heading towards, right? Ek destination hota hai. So why should we leave our money or savings without destination? So it's like utilizing all the assets that you have created so far. Now, so like we do, when we plan a trip with a family, we will always have it in advance. कि यहाँ जाना है, यहाँ करना है, यहाँ पे घूमना है. This is what the approximate expenses will be. We don't end up saying that, जब वहाँ पहुंचेंगे तब decide करेंगे कि क्या करना है. Okay? That's how a financial plan is similar to they'll have a roadmap to your entire financial journey. Coming to the process that you were talking about, Anupam, it takes good, healthy around 18 to 20 hours of discussion with the client and their family before a financial plan is built for that family. Okay. So where we drill down into the income, the expenses, the current assets, the investments, their financial goals, where do they stand in their life insurance and health insurance? Because, due to this COVID, a lot of things have thrown up on the insurance side. Okay. How they are managing their liability. Are they in a stage where, at their initial stage of their loan, so that there is an opportunity for us to save money on the interest if in case we make a plan to prepay those loans. Do they have any personal loan which should be taken care immediately? So a lot of things goes around. And of course, there's an element of tax planning. How do you optimize them? So a lot of things will go around when it comes to preparing the financial plan. So in the beginning, we'll ask for a lot of details from them. Okay. So what we do is we send an open-ended Excel sheet, okay, which we call as input sheet, where we have some pointers. And why it is open-ended? Because we would also like the investors to spend some time, right? अगर आप 15 से 20 घंटा अगर हमारे साथ स्पेंड करोगे तो आप कम से कम 2 घंटा अपने फाइनेंस को नोट करने के लिए स्पेंड कीजिए, ओके, बिकॉज अदरवाइज दैट एक्सरसाइज विल नॉट गिव द प्रॉपर रिजल्ट्स. So there are a lot of clients who will take around a day to note down those expenses, keep where the money is going, where their existing money is lying. A lot of people take time to understand where the money is lying because it's been invested here and there, right? Okay. So वैसा हो जाता है. Okay. And then of course a lot of them spend their time discussing with their family that what are the financial goals. So there's a very serious discussion that happens. After that, all these things are put in an Excel sheet, and then we start discussing on the what kind of objectives are there. Okay. And then we start discussing, have lengthy calls. Maybe these days, of course, it's all on the web calls. Yeah. Okay. So uske hisab se, okay, we start working on. Very important point, I would quickly like to touch base on, Anupam, is that when the investors start doing, or when the clients start doing this exercise of, noting down their income and expenses, okay, आज तक है ना मुश्किल से कोई फैमिली मिला है जो फर्स्ट टाइम एक्सेल शीट बनाने पे अग्री किया है कि yes, this is what my income or expenses, okay, this is what my investable surplus is, यानी इनकम बाद जो expenses निकलने के बाद जो बचता है वो, okay, there will always be a debate when you reach that figure, 1 lakh is my income, 60,000 is my expense, 40,000 is what I'm saving every month as a family. Okay. After asking that question, are you sure कि 40,000 आपको last 6 महीने में regularly दिखा है क्या? Okay. Nahi. Then we have done something. We have not assumed something. Okay. So that is how it works. So it's like complete drilling down into the expenses part also. Okay. Because that's a very important part. Because वहीं से तो आपका investable surplus आता है, okay, जो आपके हर एक महीने का investments आपके financial goals और objectives के लिए invest होता है. Okay. So once that is done, then the stage comes where we start planning for the client depending on the financial goals. Okay. Then the last leg of financial plan is where to put money. That's the last leg. Okay. And that is what a major difference between a proper financial plan and just a investment advice is, right? Okay. Investment advice will probably start with, अच्छा यहाँ पे पैसा डालना है, this is where we are supposed to invest.
Sure.
Financial plan is everything after understanding your family, where the money should be going is the last leg.
Okay. Now you mentioned about how you probably get stuck, or you have certain conversations at the level of people on the investable surplus. Okay. So as we wrap up this first part of our episode, I want you to tell our listeners, what do people get wrong about financial planning, and why is it so important to get your financial plan right? I can, your website has a lot of material on this. I'm pretty sure that you have, you know exactly what are the areas where people go wrong. So in your experience, using whatever you've seen, spoken with your clients, prospective clients, existing clients. What do people get wrong about financial planning? Why is it so important to get your financial plan right?
Sure. So, let me start with where most of us go wrong. Okay. And so let's say if in case I plan to buy a phone or a gadget or a vehicle. Okay. I will do a lot of research. Okay. Days of research, and I'll discuss a lot many things with my friends and relatives before I decide the next step of buying that particular thing. When it comes to finance and personal finance, okay, and when it comes to money, it's a very personal thing. People usually tend to restrict, okay, from discussing with people, with their friends, okay. And of course, what we do is we do our limited research and then eventually on that basis of that research, we'll go ahead and start with our investment plan. Okay. This is where most of us will end up affecting our overall wealth, you can call it as, because we'll miss out on the opportunity of growing the money more, okay, in a better manner. So that's what we try to put forward to the clients. Okay. Well, of course, there's a lot of information available outside. Okay. Like our website, there are so many websites that will keep on constantly educating the investors and people. Okay, so it's always good to have that knowledge, okay, and understand where do you stand, and then take those steps. And financial plan, Anupam, is a very subjective thing. Okay, it is based on the needs and financial status of a particular family. Okay. Each family have their own requirements. So let's say both of us are from the same age group, and even our risk profile, which we'll talk about in after some time. Okay, even the risk profile is same, but that doesn't mean that both of our financial plan would be same. Your wish list or goals will be different. My wish list and my goals will be different. Okay, so it's a very subjective thing. Okay, and financial planner basically consider all these needs and optimize your existing savings and investments. So as a financial planner, what do we do is we put ourselves in the shoes of the investor. Okay? कि अगर हम यहाँ पे होते तो हम क्या करते? Okay. And then in the end, it is possible that the investment avenues where most of the investors are going to invest, okay, would be same. But what will differ is the allocation, okay, or the holding period. इसमें इतना डालना है, इतने time के लिए hold करना है. That will differ because that will be a very subjective thing depending on the financial objectives of a particular person and the family.
Okay, understood. So let's just take a break here at this point of time. When we come back, Harshad, I wanted to go to exactly what you said about the process and whatever you were saying and how MyWealthGrowth approaches it. So folks, don't go anywhere. We'll be right back. This is the Financial Plan Special with Harshad Chetanwala, certified financial planner and a co-founder at MyWealthGrowth. And on that note, time to take the CRED convenience break. We'll be right back on the other side.
Hey, everybody, let me tell you a little bit about what happened on the IVM Podcast Network this week. We've had some amazing stuff, right? I mean, I don't know if you're aware of the redoing or the rebranding of the Traveling Professors show. We called it now Smarter with Sid, with Siddharth Deshmukh. This week, he examines Netflix getting into e-commerce, and will this affect how Amazon's dominating the space? Also, let me give you another quick hits to join up on. So on Cyrus Says, Cyrus was joined by Olympic equestrian Imtiaz Anis, and Nishan Burla from the Triangle Offense podcast showed up on Thursday's Cock and Bull to talk about the NBA Finals. On Nankari, Sadaf and Archie were joined by Keshav Chaturvedi of the Tere Mere Raste podcast. On Storytellers and Storytellers, Vineet talks to Ashim Mathur from Dolby. And don't forget to follow us on Facebook, Twitter, LinkedIn, and Instagram to keep up with what's going on the network. And with that, let me also just finally thank our sponsors. They're what makes things possible. We'd like to thank CRED, Global Victoria, Bank of Baroda, Intuit India, and Lenovo. Thank you so much for making this possible.
And welcome back to this episode of Paisa Vaisa, the Financial Plan Special. My guest, Harshad Chetanwala, certified MyWealthGrowth, your approach towards financial planning, and what are the services that you offer?
Sure. So, our idea behind MyWealthGrowth, Anupam, is to be one-stop solution provider for all financial needs. What we endeavor to build is a sort of a hybrid model, which takes care of 4 core elements of finance. The first one, of course, we discussed, and we'll continue to discuss on financial planning. So that's comprehensive financial planning, which is more of a personalized service from our end, okay, which is with the clients and their families. We discuss in length, and then we build a financial plan for them. So that's one service that we have been offering to our clients. The another leg is of mutual fund advisory, which is a mix of online and offline. This is another place where we would like to establish ourselves from a online platform perspective. Okay, and one of the reason being is that mutual fund is such a wonderful product. It can help you to take care of all your financial needs. Okay, if in case it's planned in a proper manner, and it's highly underpenetrated in India. If you just look at the numbers, and probably around 3.5 crore unique investors across India would have invested into mutual funds. Okay. So we believe that there are a lot of people who need hand-holding in terms of advice and facility of investing in all mutual funds through one particular portal. Okay, and that's what we endeavor to offer through our mutual fund advisory. Okay. Insurance planning, of course, that's another thing that we are offering, and that is something which is which has come a lot in limelight in last 1 year or so. Okay. And of course, this is also learning from our interactions with our fee-based clients whom we are offering financial planning. Okay, that there is a massive gap in what kind of insurance people believe that they should have and they do have. And insurance, when I say, I'm talking about life and health insurance both. And then the other element that we offer to our clients is on the debt management, because there is a substantial scope for anyone who is in the initial stage of their liability, particularly home loan, which is more long-term in nature, okay, to manage it well and save substantial money over the period of time in form of interest. Okay. So these are the four key elements of finance that we offer to our clients. Of course, as I said, we are in the first year of our operation. Okay, we are constantly adding more and more options and features in our online portal as well.
Okay, very interesting. So I caught you talking about mutual fund selection out here. So, this is a pretty tough question for a lot of our listeners. It's a pretty, I won't say question, but a decision for our listeners how to choose the right mutual. Do you want to just touch upon this topic in brief? Because I'm sure that you've got a pretty, you've got a pretty good process to filter out stuff. And also, if I were to ask you that, okay, Harshad, how should listeners choose mutual funds? I mean, the way that all of us do it is either it's very random. Some of us, of course, are super sophisticated and they go into all kinds of processes. But most of us look at just the last 1 year return, or maybe rolling returns, or maybe whatever it is. So, in your view, how should we be going about choosing mutual funds? I mean, what's the wrong way that people do? What do you think is the right way?
Sure. I think it's an important question for all those who plan to invest or who are already investing into mutual funds. Okay. In fact, I was just working on, so we also have our YouTube channel, and I was just working on that particular topic yesterday. Okay, so it's fresh on my mind. I can definitely, share my views on that. Okay, so I think it all goes back. Let's say, so mutual funds offer different. So one, we have to understand that there are more than 100 mutual funds. Okay, in each kind of asset class. When I say asset class, like equity hai, debt hai. Okay. If my memory is right, then there are almost 300 or more than 300 funds in equity. Okay, same goes in debt. Okay, and there are maybe around 180 or 120 funds in balance category. So so this confusion will always be there for any investor. Okay. So the right way to decide which is the right fund for you, okay, is first is see what is your investment objective. Okay, link it to your financial objective कि आपको कब पैसा चाहिए. Okay, so if in case, let's say, if my purpose of investment is to get money in 2 or 3 years, then I may not look at, or I should not look at equities, even though the equities could look super attractive right now, or maybe after some time. I should not look at it because it has the element of risk, and I may end up taking the wrong call of being in equity funds for a shorter period of time. Okay. Likewise, if in case my objective is to build money or build or create corpus for my retirement, then I would rather like to be in equities and not into debt or a liquid fund. Okay, because I have more time at my side. Okay, and I can wait for a long time for that money to grow. So the first thing is deciding on the right fund is let the objective decide. Is it a short term or a long term? Okay, on that basis. Second is, of course, the risk appetite, how much risk one can take. Let's say, just to give you an example, that yes, I am looking for mutual funds and I would like to invest for a long-term perspective. Okay, but then I am at my initial stage of my journey in mutual fund investing. Then I would be better off investing into a large cap or or an index fund. I will not venture out into mid cap or a small cap because my risk appetite is yet not developed. Okay. So first is your financial goal. Second comes your risk appetite. Okay. Third comes the the fund, okay, or the fund house where you are investing into. So there are more than, I think, 40 fund houses in India. Okay, and each fund house, like each one of us have our personality. Each fund house also have in a way their own personality. Okay, they have their own way of thinking. Okay, their thought process is reflected in the product that they offer. Okay, so there are a few companies or the asset management companies who will offer many products. Okay, and there will be few companies who will offer very limited product, which is more relevant to the investor. Okay. So understand, you have to understand the thought process of the asset management company. Okay. Basically the philosophy. Okay. Then comes the fund. Okay. Performance is key. Understand that. Okay. And if in case I have to, look at the way most of the investors will look at mutual fund investing, the first criteria will be performance. Okay. No doubt performance has its own significance when it comes to, identifying the mutual funds, but, avoid being, or avoid selecting funds on the basis of short-term performance. Okay, or particularly last 1 year performance. You can consider that the market has been running a lot. So ऐसे इसमें तो an average fund would have also delivered, but that's not a benchmark. Whenever you look at the fund, or when you look at fund from a performance perspective, look from a long-term horizon. Okay, 3 years, 5 years. Ideally, look from a rolling return perspective. That gives you more idea about the performance. Okay, see the performance, whether the fund has, how the fund has been doing in a good phase of the market and the bad phase of the market. Okay, you get more idea whether this is just a bull rally kind of a fund, or this fund has potential to do well in a rising market as well as save your capital in the falling market. So that's where the performance part comes. Okay. And then, of course, there's another aspect, which is, I don't want to sound more technical, but in a very simple language, there's something called churning ratio. Okay. Portfolio turnover, jo kehte hain. Okay. Technical word is portfolio turnover. In simple terms, it is basically how many times a portfolio of the fund has changed in a year. Okay. So in a very simple language, if the portfolio turnover of a fund is 100%, it says that within 1 year, the entire portfolio of the fund has been changed. Okay. So this also reflects a lot about the confidence of the fund house and the fund manager in building that overall portfolio. Okay. And the more the churning, higher is the cost, right? Because at the end of the day, these companies have to buy and sell equities. Okay. So with that thing happening, the cost of the fund will also go up. Okay. So these are a few of the things that investors can look at. And there's a lot of information which is available.
Sure.
A lot of information is available.
Okay. Now that that's out of the way and we're kind of winding up this episode, there are a couple of questions left that I wanted to ask. First is, what would be your advice to, say, a 25-year-old starting to draw his financial plan today? So someone who's just starting his career, has just got his first salary, and obviously therefore has a long what's called runway for growth, has time on his side. What would be your advice to him as he sits down to draw his financial plan?
So the first thing is, make the most of the time that you have in your hand. One of my friends told me, Achha, the most perishable thing in life is time. And which is right, so right. Ek baar jo time chala gaya. Okay. So I think what does a 25-year-old have who is starting his career and started drawing his salary or her salary? Okay. I think you have time on your hand. So start early with your planning. You will never regret with that decision. It's because you're most likely to take the right decision because it's a more well-informed and well-planned decision when it comes to planning your finance with the help of a financial plan. Okay. And the other part is, when these days when I'm interacting with so many young people and young couple, Anupam, one thing I have noticed is that the tendency of these people to invest, of course, they have a higher risk appetite, but there are a lot of people who would just like to keep their money parked in their bank account. Okay, don't do that. I would suggest that since you have time on your hand, okay, build your thought process that you would like to create wealth in a maybe 6 years, 7 years, 10 years timeline. Okay, of course, it's very difficult for us to tell a 25-year-old who has just started career to think about retirement. You should not. Okay, you should not. But you should start thinking that, of course, in 10 years, my life is going to change. There are a lot of responsibilities that are going to come. Okay, yes, I'll be better ready with some sort of a wealth creation goal for a 10-year. Okay, And that's how we started developing the plan for these young people who have just started their career or who are maybe 2 or 3 years in their professional life. Okay. And of course, all said and done, okay, we also put forward, and you should also do that, okay, is to strike a right balance between enjoying life and thinking about money. Okay. ऐसा नहीं कि सिर्फ पैसा बचाते जाइए और कुछ मत कीजिए. Okay. Strike a right balance, because this is the stage where you should also enjoy your life, because the next stage is where you're going to get into a lot of responsibilities. Okay. But yes, if in case you do in a planned manner, okay, you'll be able to do both in a better way.
Okay. And last couple of questions. So one is, could you give us a checklist of what our listeners should look out for when they are looking to hire a financial planner? As in, after listening to this episode, they feel that they should be looking out for financial planners. I think one of the issues we've always had in my conversations, at least going from my conversations, is one is of trust. I think probably some of us are still confused between distributors and planners, where they're earning commissions from, whether they have my interest at heart or the product's interest at heart. So if you could just walk our listeners through maybe a checklist or maybe 2 or 3 specific points for them to consider when they're looking out for a financial planner.
Sure. So I think, Anupam, one point is, of course, there are a lot of financial planners outside. There are a lot of website portals and apps that offer advice and suggestions to the investors. Okay. I think when you look at finance, okay, it's not just algorithms or ready-made solutions. Okay. So you have to look it from always there is a human element which is involved when you talk about finance and financial planning. As I said, when we interact with our clients, there are around 18 to 20 hours of conversation with the client. Now, the risk profiler that we talked a while ago, okay. Now, let me give you a small example about, there's something called risk profiler, right? Okay, which is nothing but a question which is based on the answers. There's some particular score which will be given, and then we define that this is the risk profile. Acha, inka risk profile high hai, low hai, ya medium hai, jo bhi hai. Okay. But what happens, Anupam, is when we start interacting with the clients and their family, okay, that is where the real risk profiling happens. Okay. At that stage, these are the initial stage where even the clients will understand how does a financial planner thinks. Okay. Now, I have interacted with clients who have been calling the financial planners, and some of the financial planners, of course, and due respect to them, because they are all occupied and busy, and they have done phenomenally well for their clients. Okay. They sometimes put forward that they will be available for 50 minutes or 30 minutes, and beyond that they charge. Okay. Now it's up to the client to decide who is more relevant from a financial planner perspective. Okay. Now, what approach we understand is that when we start interacting with clients, okay, clients also have all the right to understand how do we think. Okay, so basically, few things that, of course, one can look at is how experienced the financial planner is. Okay, and what are the avenues where financial planner plan to invest or give a solution to the client and their family. Okay, then if you look at from the other perspective, okay, maybe client would like to understand more about, okay, where is does the financial planner have his own skin in the game? Okay, and this is something which we always highlight to people, that wherever the solution will be given, okay, this solution will be based on where I will put my own money. Okay, and because we have to understand that each of these, and how well does the financial planner understand the family of the client. Okay, the life goals have a lot of emotional value. Okay, because it's coming from a hard-earned money of the client, right? Okay. So while looking towards a financial planner, very frankly, in case I have to put forward, okay, then you look at the financial planner, okay, who have the right mind to work on the right financial plan, at the same time have the heart to understand your financial needs and your financial status. Okay, because it's not just numbers; it's also that plan carries a lot of emotional value for the client.
Okay,
that's very important. That's very important.
Okay, understood. And finally, Harshad, where can our listeners reach out to you? I see that you've got a YouTube channel, folks. The YouTube channel is called MyWealthGrowth, and check it out on YouTube. Harshad, how else can our listeners reach out to you?
Sure. So, of course, we have our website, mywealthgrowth.com. Okay, anyone can feel free to write their queries on our email ID, that is care@mywealthgrowth.com. Okay, and soon we are planning to start a online webinar every fortnight to educate our audience on personal finance, investment management, mutual funds, insurance planning. Okay. So all those who have registered on our website, okay, and we do have some set of people who have registered. Okay, we will be offering these for free of cost. Okay, and these will be every fortnight. We'll be picking up one topic and probably we'll be having a discussion or a talk on for 20 minutes to half an hour, just to educate people in the right manner.
Okay, understood. Great. So, folks, that is a wrap on this episode. If you want to reach out to Harshad, he's Harshad Chetanwala, certified financial planner, co-founder at MyWealthGrowth. Like I said, there's a YouTube channel, and he has his own. And MyWealthGrowth also have their own website. You can check out their website at mywealthgrowth.com. And Harshad, thank you so much for doing this for our listeners.
Thank you, Anupam. Thank you. Thanks once again.
And listeners, if you like this podcast, don't forget to check out other interesting podcasts on the IVM network. You can listen to us on the IVM Podcast app or ivmpodcast.com. You can also follow us on our social media. We are IVM Podcast on Twitter and Instagram. If you want to reach out to me, I'm your host, Anupam Gupta, B50 on Twitter. Thank you, folks, for listening to Paisa Vaisa, brought to you by CRED, the most rewarding credit card bill payments app.
No material on the show should be considered as financial advice. The material on the show is for informational purposes only. Please consult a financial advisor before taking any investment decision.
Hi, everybody. Just wanted to ask everyone for a quick favor. We're running a brand survey right now and would really appreciate it if you could let us know what you think about the advertising on IVM. Go to ivmpodcast.com/survey and do let us know. As part of this, we'll be selecting 10 random participants and sending them some IVM swag, so do fill out those surveys.
We live in an age of disruption, of immense change in every aspect of work, life, and business. But is the old way of doing things truly dead? And are we ever going to stop saying the new normal? Join me, Varun Dugirala, on Advertising is Dead every Tuesday as I talk to entrepreneurs, leaders, creators, and change makers from across business, media, marketing, and beyond to dig a little deeper into how we got here, what we're doing now, and where we're headed. You can catch all the episodes of Advertising is Dead on the IVM Podcast website, app, or wherever you get your podcast from.